Welcome to a supplemental video update. I do a number of videos every week, and some of you may have run across them before. I do a video every day. I do a number of weekly videos. I also have a website that I operate, and I post a number of videos there that I don't post on either YouTube or Rumble. But as I was going through the charts, and as I've been doing this for many decades, I noticed something that I wanted to bring to your attention. Now, I'm not trying to just freak everybody out. I'm not a doom and gloomer. I'm not always the optimist. I like to look at things for what they really are and then just evaluate them. And what I'm seeing right now may not even end up happening. When it comes to the stock market, what you don't know is what can kill you. We're looking pretty good as I record this. This is July 14th. That's a Monday. We've just come off of setting new all-time highs with the S&P, the NASDAQ 100, the NYSE. We're getting close to what we call a golden cross on the Dow, where the 50-period moving average moves back above the 200-day moving average. We're even seeing some improvements in areas such as the transports. They've been really disappointing over the last couple of years. And then the mid caps and small caps are improving, but they're not turning positive yet. In amongst all of that, even though we're looking really good, we're seeing sentiment very high right now with the readings that I do, and I go through those in the videos that I post every day and week. There's something that I just want to bring to your attention, and I'm just calling it a seasonal pattern warning. Doesn't mean this is going to happen, but it could happen, and so we just want to be aware of this. What you'll find where I'm different than a lot of other folks is people need to seem to have predictions and forecasts. That's why we watch the weather on the news. That's why we watch the pregame show before sporting events. We want to try to figure out before it actually happens what is actually going to happen. And there's a real need for that. It's an inherent need for us, especially when it comes to the stock market. And because we think that somebody else always has the inside scoop on things, we're willing to go to somebody else. Now, you can come up with your own conclusions and your own forecasts and so forth, but a lot of times people are looking somewhere else. It's like, okay, what they're saying makes sense, and so maybe what I should do is what they're telling me to do, and then it turns out to be wrong, or you get in too early, you get out too late. A number of different things can end up happening, but we have a real need for that as people. Even if the predictions and forecasts that you look at are wrong or they're biased, and I'll go through that here in just a moment, the need still persists, even when it goes against our better judgment. The stock market is not necessarily complicated. You buy low, you sell high, you look at a chart. If you use technical analysis, that's always in hindsight. We try to figure out what to do right now based on where things are at. And that's my approach. I don't forecast. I don't try to look ahead and say this or that's going to happen. I do look at those things and we want to be aware of them, but I don't make my decisions around that. And I certainly don't rely on other people to tell me what they think I should do. I've been doing this for many decades, and I'm an educator, and I teach the idea of critical thinking. Think for yourself. Now, you're going to be wrong, but you're also going to be right. But in the process, you are going to develop a skill, and then that skill is going to serve you quite well. And that's what I do in the program that I have. We have the Perma-Bulls. No matter what's going on, the market's going to go up. And there are some folks out there like that, and that's what we're trying to do. That's why we look for these stocks that we want to buy low and sell high, because even when the market's going down, there's a bull market somewhere, and there are stocks that still continue to go up. Now, this is more heavily in our favor, because if you look at a long-term chart of the S&P or the Dow or any major index over at least 100 years, now the S&P doesn't go back that far, but they recalculated it to go back, especially like the Dow. It goes up about 70% of the time. And so if you're bullish, meaning you think the market's going to go up, you're going to be right. But that 30%, when we end up going down, that's the killer part. And that's when a lot of gains can be wiped out. It's really difficult to navigate through those waters at times. We have to think that the market doesn't always go up, but most of the time it does. And then there's the Perma-Bears. And there's a few of these folks that I've been following for years, and they've been wrong for years. They use different approaches. It seems like for some reason they use a lot of Elliott wave, which I'm not a real big fan of because it's more subjective. And some of you might be familiar with what Elliott wave theory is. It looks great. It's perfect, telling you what you should have done in hindsight. Well, you don't even need any indicators at all to tell you what you should have done. You could just look at a chart and say, I should have bought here, I should have sold here. You don't need that to be reinforced. The folks that tend to lean on that type of analysis, because it's very subjective, they tend to be kind of negative anyway, and they're always predicting doom and gloom right around the corner. I've run across one or two that are more realistic with their approach. For the most part, they tend to be kind of negative. There's people that write newsletters out there. There's people that put videos on YouTube and Rumble where the big crash is right around the corner. We're getting ready for a 20, 30, 40% decline. Now, if I did that, and in fact, the thumbnail I'm using for this particular video, I really hesitate using that. It's a big danger sign. I don't like to appeal to people's emotions. I like to appeal to people's intellect and intelligence and the idea of learning a skill. But that's why a lot of these headlines or the titles for the videos, they're trying to get your attention, they're trying to scare you, and then they use a thumbnail that tries to scare you even more. So then you click on that video, and it might not even be anything close to what they're talking about based on why you clicked on that video. We call that clickbait. I try to really stay away from that. I've been in the markets for a long time, but my number one calling in life is I'm an educator. I try to educate people using critical thinking. Think for yourself, developing those skills. Do you want to take the time, effort, and energy to actually develop those skills? Because we don't have them naturally when it comes to the stock market. It may not be complicated, but that doesn't mean it's easy to do because there's all these emotions. The stock market ends up being like a big form of Las Vegas, just going to the casino. I try to remove all of that. I don't use gambling tactics. I mean, there's probabilities attached to everything that we do in life. You could be walking down the street and get hit by a car, or something bad can happen. Now, the probability is small, but the probability is still there. And so what we try to do is take the probability and move it as much as we can in our favor. So what I try to call myself is a Perma-Realist. There are times when the market goes up, all right? And we take advantage of that and do quite well. There are also times when the market goes down, and we take advantage of that. In fact, over the years, I probably made more in profits with the market going down than with it going up, because it goes down faster than it goes up. It's all emotion. Everybody's freaking out. Just look at what happened back last March and into April. We were going down fast and furious during that time. The COVID crash, we were going down really heavy all at the same time. So those things tend to happen faster, where it can take longer if you're looking for the market to go up. And then investors or traders, now it's mainly for tax purposes. If you hold on to something longer than a year, that's a loose definition of an investment. If it's less than a year, that's called a trade. We use emotion, just like we're going to Las Vegas. We're going to be right just enough to think that we're onto something, to think that we have some intuition, that we have some insight that maybe other people don't have. And we can use that. That can end up being very dangerous because about the time you think you got this whole thing figured out, everything kind of shifts because we do see different climates that happen and come and go in and out of the market. And then you're going to make a pretty big decision to get into something and it's going to go against you. And you're like, oh my gosh, instead of being offensive and saying, okay, I'm going to make a profit, now you're playing the defensive game, and that changes everything. What I found over the years is when it comes time to buy, and I'm not Walter Deemer, I just found this quote by him. When it comes time to buy, you won't want to. The best long-term positions that I've had over the decades, it didn't feel like the right thing to do when I was getting into it. It felt like the wrong thing to do. We were hitting a bottom, we were going down. All of a sudden, I'm looking at my charts and it says, okay, this could be a good time to get in. But my emotions were saying, don't. When we're really seeing some nice profits and it's time to get out, it's not going to feel like the right thing to do. That's why I set targets. Way before we even open up a position, we set up a target. So Warren Buffett, you probably have heard of him, probably the most famous investor of all time. There's a lot of books about him. Everybody wants to be like him. Well, here's his quote. Forecasts may tell you a great deal about the forecaster. Again, we got the Perma-Bulls and the Perma-Bears. That tells you about them, but they tell you nothing about the future. Yet investors often seek them out for comfort in an unpredictable market. And then a similar quote here is, the great error of forecasting is that people think they can eliminate uncertainty. Now, I will tell you, there's no reason why anybody should ever lose in the market. And I teach that in the program. We implement hedging. And so when we're wrong about something, the worst that's going to happen is you're going to break even. And if you're interested in that, check out what I have to offer. Investors cling to predictions because they crave the illusion of control. That's all it is. And sometimes we feel like, well, maybe I don't really know what's going on. I'm kind of new to this. Maybe I better rely on somebody else. And so you do what they say, and then you end up being wrong, or you have some confidence in that when really it's like maybe you shouldn't have had a lot of confidence in that. And then another one by Howard Marks, investors are often drawn to forecasts because they promise certainty in a world that is inherently uncertain. Anything can happen at any time. Now, we put the probabilities on one way or the other, and there are times when the market really trends, and we follow lots of indicators. My videos are longer because I try to analyze everything that I can, but even then, we're not always going to be right. So we always want to have safety. We want to have backups. My rule number one is don't lose money. That's not most people's rule number one. Rule number one is my rule number two. Now we make money. Take care as best you can of not losing money. And then when that's covered, now let's look at trying to make some money. And that's the foundation of the program that I do offer. Okay, just to let you know a little bit about that, I do have a full program. Incidentally, I'm recording this on July 14th, which is a Monday. Even though I say here it's $97 per month, 30-day free trial, you have to sign up for the website. It's hosted on Substack, but it's going to be free at least until the end of August. Feel free to check it out, see what you think. You and I can set up times to talk. There are courses that I'm in the process of revamping and re-recording, so they're not on the website right now. There's a basic course that's there. I put out videos every day. There are videos that I don't post publicly that I do have on the site. But right now I'm looking to actually start the membership payment part of this probably in September. If that isn't of interest to you, on YouTube, and I may have to switch this over to another service. I may switch this over to Substack as well. But right now I have a YouTube membership program, and that's where you just get immediate access to the videos. I delay them. Like the daily video, you don't get access to that until right when the market closes for that day. Well, I record the video many hours before the day. The videos are designed to be viewed before, or at least right after the open each day. And so when I delay them, you're getting kind of old information at that point. If you want immediate access, you can just get access to the videos. And that also includes a podcast that I do. And I try to keep that really short just to go over things. And I also have a newsletter, which I also try to keep short. It's like my videos sometimes are 40, 45, 50 minutes long. And you're like, I don't have time to do that. Well, read the newsletter. That's part of the membership. Go through and listen to the podcast. That's 4, 5, 6 minutes there. I try to keep that really, really short just to give you an idea. Okay, now I'll go in and watch the video. Now that I listened to the podcast or read through the newsletter or both, now I need to take the extra time to go in and maybe do some more analysis. Then I do just have the newsletter itself. That's $8 a month. Here's the link down below. That's also hosted on Substack. And then there is a free section. There's not an awful lot there. I have a bunch of blog posts, but I just haven't had time to revamp them and actually post them. And then like this video will be posted there. And there's other videos that I will also post that you'll have access to there. That's free. But everything, all of this stuff, if you go back to the full version, this includes the podcast, the newsletters. You can talk to me. We can set up one-on-one time to actually get together. And the courses as they're rolled out, all the daily and weekly videos, all of that's included. And it's free, at least through the end of August. Okay, now let's go back into what I'm talking about here. Yeah, that was a shameless plug, and I'm not embarrassed to do that because I'm trying to promote what I'm doing here. But this is the chart that we looked at over the last few years. of the price action, where if you look over on the left-hand side, this is when we hit the low in October of 2022. I was saying, okay, we could be getting really close to a bottom here. We're hitting support. I use a lot of different tools to analyze that. But man, the comments, and I'm getting emails, and they're like, no, we're getting ready to tank. The Perma-Bears are dancing on the grave of the stock market, just totally sure that we're going down. Sentiment was really negative at that time. It had been a very difficult year in 2022. Well, we finally set a bottom, and then we started to come up off of that. And it didn't seem like it at the time. Go back. My videos are still on YouTube and Rumble. Go back and see what I was saying during that time, if you want to really see what my analysis was. But we were able to bounce up off of that and really start to come up as we got into 2023. And then we got about into the middle of July in 2023. And initially, we just saw a bit of a pullback and then a bit of a retrace. Not a lot of damage done there. But then we ended up carrying this down all the way into the end of October. And then we set another pretty significant low in October of 2023. And then we bounced up off of that, ended up finishing the year strong. And then finally, we started coming back and setting new all-time highs, or at least getting close to that. We had a bit of a pullback in April of 2024, but it didn't turn into anything that lasted all that long. Then we got into July of 2024. We got about midway through, and we're looking good. Everybody was happy. Everybody was just sure the market is going to keep going up, kind of like we are right now. Any news that was coming out was treated as positive, even if it was negative. And then we ended up having about a 10% decline here. And we came back, and then we were able to bounce up off of that. We stabilized, had a bit of a retrace, and then ended up having a really solid finish into 2024. This is the crux of this whole video. We're kind of there right now. Now, am I predicting this? No. Wouldn't it be nice to at least be aware of this ahead of time so that you can plan for it and watch for it and see if it does actually play out? Nobody knows. Now, there's going to be YouTube videos out there that are going to predict this. Either we're going to keep going up or we're going to see this massive crash. Okay, I ignore all that stuff. Let's just play it out. And then that's why I do the videos every day. We just look at this incrementally. Little shifts, little changes, day by day to see how things are actually adjusting. Now, this looks at it more on a percentage basis, and as I say when I go through my own videos, I drew these lines on here, so the percentages are not even close to being exact. But this is where we hit the bottom in October of 2022, and then we bounced up off of that. Now, I do it on an intraday basis. Technically, you do it on a closing basis, but we had about a 10% decline from July going into October. I'm getting comments and emails saying we're going lower. And I'm like, that's not what I'm seeing. We're hitting pretty solid support here. And then we bounced up off of that and kept going up. Then we got into 2024. We did have the pullback again in July. This is after we were setting all-time highs. And the semiconductors were doing good. Tech was doing good. And then all of a sudden, we had almost a 10% decline intraday there. Then we were able to come up, stabilize, have a bit of a pullback. Very common. You see that typically happens here. Then we had another decline here as we're finishing out 2024. We ended up having a pretty strong year. Now, 2025 has been crazy because of the tariffs and trade wars and all that stuff. We did see on an intraday basis, we did decline over 20%, but on a closing basis, we were not down 20%. If we decline 20% from the high, that's considered to be a bear market. And this is when the smart money started to come back in. We were watching this as it was happening. It's been really crazy, but we were able to bounce up off of that. We finally surpassed the previous high. And now we're not at a high right now, but we did set one a couple of times with the S&P in the last week. So there's a similar setup here. I'm not predicting anything. It's just be aware of this. Now, another thing, and I don't rely just on this is called a mass index. This is an indicator that tries to predict reversals. Now, if you look at the context for this, when this was going up and the signals are generated, there are three criteria for this particular chart. First, we cross above the red dash line, then we go above the blue line, and then when we drop back down below the red dash line again, that's when the signal is triggered, and this just got triggered recently. Well, what was happening for these signals to actually happen? We were going up. Now, this is a weekly chart. Okay, this isn't a daily chart. We're still looking pretty good. We're looking pretty solid here. Higher highs, higher lows, setting recent all-time highs. Now, we get these on the daily side every once in a while, but I'm paying a little bit more attention to this because this is on the weekly side. But right now, on July 14th, 2025, there's very little confirmation that we're going to see some kind of a massive reversal. So I'm just looking at this ahead of time just to see if that's what ends up playing out. I kind of hope I'm wrong. When it's going up, the world's a better place. You know, you might be struggling at your job, you might be struggling with debt, but hey, your portfolio is going up in value. And so that gives you a little bit of confidence and makes you at least see some hope there. Your retirement seems to be looking pretty good. This kind of comes in the face of a contradiction as to why we're not exactly the same as we were in 2023 and 2024. This indicator measures how far either above or below are we from the 200-day simple moving average. Now, if we go back to 2023, when we hit that high, we were well over 10% above. We were closer to maybe 13, 14% above the 200-day moving average. And then that's when we saw the decline going into October. And then in 2024, when we got into July, we were even higher than that. We were 16, 17% or so above the 200-day moving average before we saw about the 10% decline there. We're not there now. We're above the 200-day moving average, and that's positive, but we're not above this 10% level. So that's one kind of caveat to say, well, maybe this scenario won't play out that way. I believe in looking at all angles and then just seeing how things actually play out and then making day-to-day decisions there. So thank you. I hope you found this helpful. Please feel free to contact me if you want to set up a time to talk. I hope you're having a really good week, and I will talk to you in the next video. I post every day on YouTube and Rumble, and feel free to check those out.